Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
With the latest is Bloomberg's Mike Shepard. Shep, walk us through the latest developments over the last few days on this front.
Well, there's really been a lot happening with respect to Intel. We've chronicled over the years, thanks to our colleague Ian King, all of the company's struggles, and they really reached an inflection point last month. We saw that really rough earnings outlook that they gave toward the end of August that sent the company's shares sliding by the most in decades. And since then, everybody's been wondering, where do they go from here? Well, the company has had a board meeting. They've decided to cut more than 15,000 jobs, try to trim $10 billion in spending. But now we're getting a few other bits of good news this week. One of them is this news from the company and from the Pentagon and Commerce Department that Intel is eligible for up to $3 billion for military chip production. And this accompanies roughly $20 billion in loans and grants that Intel is due to receive for commercial production under the Chips and Science Act that the president was just talking about in that clip. The company also announced this week a partnership with Amazon World Services to produce a multi-billion dollar initiative to produce semiconductors for artificial intelligence for Amazon's cloud computing arm. This is potentially more significant than the military chip we were just talking about, only because it shows that Intel is developing a commercial customer base that could feed some of the new plants and support some of the new plants that Biden was talking about and hoping to see built.
Shep, this isn't just about building manufacturing bases in the United States. This is a national security concern. Why is the administration coming out and touting this, but at the same time looking to block, now there's an extension when it comes to Nippon Steel, an ally of the United States, a Japanese company, and their $14 billion takeover of U.S. Steel?
Well, on the steel front, it's very much a politically charged question because Nippon Steel's attempt to buy U.S. Steel, there is such symbolism, and it is so freighted with U.S. Steel being an iconic company for the U.S., and especially for President Joe Biden, who hails from Pennsylvania. So the resistance politically to that proposal is not surprising. I think we have to separate a little bit the national security front on chips, because that is a really core and consequential technology that if the U.S. loses any ground to China on this front, it would be a potential risk militarily in the Pacific Basin.
Shep, do you know what the national security concerns are when it comes to U.S. Steel and Nippon Steel?
One of the concerns is that, Nippon Steel actually does a fair amount of business in China. And would U.S. Steel's production somehow be vulnerable to shifts if, once the company takes over, if the transaction were ultimately approved and it is not looking terribly favorable? Would some of the production be shifted over there? And if U.S. Steel makes some advances domestically and, perfect some of its techniques, would those get transferred somehow to production in China? So what they're worried about is the nexus of U.S. production with Chinese production that Nippon Steel will ultimately have control over should it somehow pull off a completion of this deal.
Call me cynical here, but when I saw that it was pushed back until after the election, this particular decision with Nippon Steel, I thought to myself, well, doesn't that make it convenient for a lot of the politicians? They can rail against it, say they're completely, for keeping U.S. businesses domestic in their entire ownership, and then approve it later when it seems like there's no better option, really, for U.S. Steel. Is that the right way to read this?
Well, Lisa, I'll share your cynicism. It really did look like a convenient move to push it after the election, to also remove it as an issue. If the decision were made before November 5th, that would expose the current Democratic nominee and presidential candidate Kamala Harris to accusations that no matter which way it goes, it would somehow be harming U.S. industry. And if they decided to approve it, it would hurt the party's standing with union workers, whose votes and support they really need come November 5th.
Hey, Shep, appreciate the update down in Washington. Bloomberg's Mike Shepard with the latest on several fronts. Listen to this for a forecast. It comes from Max Layton of Citi, thinking prices will actually grind lower over the next 3 to 6 months and average $60 a barrel in 2025. Max joins us now for more. Max, we've got plenty to talk about and lots of commodities to discuss as well. But let's start with crude. Why isn't this a bigger factor in your outlook?
Sure. I mean, just to clarify, in the short run, we're seeing a lot of upside risks in the oil market. We have an average price forecast of $74 for Brent for the fourth quarter of this year. So there's upside risk from what's going on in the Middle East in terms of potential risk premium in the market, Russia, Ukraine, hurricane risk. Libya's outage is ongoing and may go on for months and months. The market may continue to get a boost from the Fed cutting cycle in the very short run. But I guess the broader dynamic, which we've been highlighting since at least January of this year, is that there's slowing demand growth, whether it's led by China or just a broader global cyclical weakness. And it's being met by solid non-OPEC plus supply growth. So OPEC plus has a problem, and they have a problem with spare capacity. They've been cutting for 2 years. So, they've got a big decision to make in early December.
There's a question about whether oil is getting increasingly divorced from the economic cycle in terms of an indicator, and whether there is this divergence between China and the U.S. that makes it increasingly confusing, as well as the transformation of a lot of the energy ecosystems to electric vehicle and other types of renewable energy sources. How much do you attribute that transformation or transition as part of that sort of decline in demand?
Yeah, we think that's a big part of the story. So there's a structural part of it, which is being led by China, which is investing massively in the energy transition. And in response to shocks, China's probably going to double down on that investment in the energy transition, and specifically going to accelerate the adoption of electric vehicles, which retail adoption was around 54% last month of electric vehicles, which is up about 20 percentage points over the last 12 months. So massive. China's basically solving all the problems we talk about in the West with respect to electric vehicles. We talk about range anxiety, price anxiety, charging anxiety, weather anxiety, their latest vehicles, the latest batteries. Some of them haven't been mass produced yet in terms of the vehicles and the batteries, but they're solving these problems, and it's evidence in the data, and it's evidence in the slowing in oil demand growth. And there's a cyclical element as well, which is why the Fed's most likely going to be starting a pretty aggressive cutting cycle this week.
What I find fascinating is that oil used to be sort of a geopolitical temperature taker, or at least an economic temperature taker, and now it seems to be shifting a bit to precious metals. You expect that precious metals will actually get arguably the biggest boost from some of the rate cuts that we're expecting to see. Can you explain why that is, and why that's maybe the better macroeconomic indicator right now than oil?
Yeah, we're really excited about precious metals, particularly silver, but also gold. But the reason why silver looks super interesting right now is, I spoke a bit about how oil is negatively exposed to China's energy transition. Silver is positively exposed to China's energy transition. So China has this bifurcated economy where energy transition sectors are relatively strong, and the cyclical, the housing, the private sector, the prices of property, wealth impacts are all super negative. Sentiment's quite negative in China. Silver's also bullishly exposed to that. The retail buying of silver just started to pick up over the last couple of months. You're seeing the first kind of imports of silver in bar and coin form into China that we've seen for years and years and years. So silver's kind of uniquely exposed in a bullish way to both the bearish part of China and the bullish part of China. It's going into solar panels on the energy transition side in particular, as well as EVs. And obviously both gold and silver are super exposed to lower real rates in the US, weakening US growth fears, and we're going to probably get a big wealth shift into gold and silver from US and global investors exposed to their own regional cutting cycles.
Max, do you continuously see central banks buying gold to diversify away from the US dollar?
Continuously, certainly we see it for the next 12 to 18 months. Tough to forecast beyond that horizon. That's a long enough horizon for me. But yes, certainly there's enough treasury holdings left to sell to buy much more gold.
Max, we've got to do more of this. Appreciate the clarity on the outlook, sir. Thank you. Max Layton there of Citi. I want to pause and talk about the biggest story of the last 24 hours. Just pause. Imagine you received this movie script. Imagine you saw this movie at the theatre. I don't think you'd believe it. I think you'd think this was a stretch. What took place in Lebanon in the last 24 hours? Thousands of pages in Lebanon exploding yesterday, simultaneously, all at the same time, killing several people and leaving almost 3,000 wounded across the country, including hundreds of members of the Hezbollah militant group. Hezbollah accusing Israel of orchestrating the attack. Israel declining to comment. Let's head over to the region and catch up with Joumanna Bercetche now, joining us now from Dubai. Joumanna, walk me through this. This looked like an action movie out of Hollywood. It was not. It was real life. What do we know happened?
That's it. A feeling of shock, disbelief, fear is prevailing right now in Lebanon. So what we do know is at 3:30 p.m. local time yesterday, these pagers all exploded simultaneously. The Lebanon health minister just put out a statement now saying 2,800 people were injured, 12 people were killed, including 2 children, and many of them are in serious condition. There are about 200 to 300 serious cases. Interestingly enough, the Iranian ambassador was also harmed in this attack, and both Hezbollah and the Lebanese government were very quick to blame Israel, with the Lebanese Prime Minister Najib Mikati saying that this is an attack on Lebanon's sovereignty. Israel themselves have declined to comment. They haven't said anything about the incident. But what this constitutes is an embarrassing security breach for Hezbollah. It is the biggest security breach ever. And lots of people were saying, what were these operatives doing, walking around with pagers anyway? And you have to rewind back to a speech that Hassan Nasrallah, the commander-in-chief of Hezbollah, gave back in February, where he warned military operatives to not use their cell phones out of concerns that they may be intercepted by Israeli intelligence. And he thought that maybe if they use these low-tech devices, the pagers, it would be safer. But obviously you fast forward to today, and what we're seeing is a massive intelligence and security breach, and now Hezbollah is on the defensive.
Joumanna, is this a case of escalation to de-escalate, or do we think, or do you think, how you're reading the tea leaves, Israel wants to escalate to escalate? What happens next?
I think, Anne-Marie, that we are seeing a whole new level of warfare. And what we have seen since October 7 is daily crossfire, exchange of fire on that border with Israel, the northern border. What this has meant now is we're moving towards a new type of warfare, and this is cyber warfare, a lot more question marks, a lot of different operators going behind the scenes. If you look at all of the cyber security comments that came through yesterday, trying to understand exactly what happened, it's still not clear. But what has emerged is this feeling that these devices had been tampered with in potentially a different country, and therefore the shipments that came through just a week ago, according to Al-Akhbar, this is a news agency that's closely associated to Hezbollah, were all contaminated with these explosive devices. So it does raise a lot of questions about the new type of warfare that we're entering into, but certainly Lebanon is on a high state of alert. And even if you rewind back earlier on in the day yesterday, the Israeli government, the Prime Minister Netanyahu, was saying that they've got a new war objective now, and that is ensuring that security on the northern border is taken care of so that people can start returning back to their homes. Because since October 7, there has been this daily exchange of crossfire, and people have been forced to evacuate. And so they want to resume some normalcy. And the question is, unless there is a diplomatic solution, will this open the door to a larger scale operation?
Shocking scenes yesterday. Joumanna, thank you. As always, Joumanna Bercetche there of Bloomberg, leading our coverage out of the region.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.